Treasurer Wayne Swan says the surplus years are here. He's pulled a modest $1.5 billion rabbit out of a hat from a $44 billion deficit. And there's a promise of years of growing surpluses to come. Well, joining me now is HSBC Chief Economist Paul Bloxham and Citi's Head of Research, Bruce Rolph. Gentlemen, welcome. Paul, start with you. 4 years of surplus, the Treasurer said in Parliament today. He got a laugh, of course, from the other side of the chamber. How credible is this surplus?
Well, this is the key question. We're talking about forecasts here, and this would be a beautiful set of numbers if it was actually reality at this stage, because we're expecting trend growth this year in 12-13. We're expecting a fiscal contraction that's the largest contraction we've seen since the 1950s, and if those two things were to happen at the same time, that would just be a pretty good space to be. I think it lacks some credibility, that set of forecasts, because if you are going to have that larger fiscal contraction, it's going to put some downward pressure on the economy, and I think that it very much relies on those economic assumptions, which of course are very dependent on the rest of the world as well.
Yes, well, Bruce Rolph, what assumptions are you most concerned about in the budget?
First of all, I'll characterise the election as the budget as a pre-election budget without the election.
That's how you see it. Yeah.
That's right. And the key risks to us would be the revenue assumptions. We've seen very disappointing performance over recent years in delivery of revenue. And indeed, with the nature of the risks globally, particularly in Europe at the moment, it's not an unlikely scenario that you see revenue shortfall so significant and fairly rapid that the government begins to anticipate a mini-budget before the end of this year.
Oh, so you think there could be a mini budget halfway through? Yeah.
The Treasurer clearly has staked his and the government's credibility on delivering a periodic budget surplus next year.
Yeah, Paul, a big surprise really was that the GST take is going to be down over $11 billion. How could that translate or impact on federal fiscal management? Because of course it's a state issue, isn't it?
That's right. Look, the overall story here is we've had a number of years now where we've had a downside surprise on tax revenues. I think what we're seeing is that the structure of the economy is changing, but the tax system hasn't really changed in line with that changing structure of the economy. The mining sector is driving more of what's going on in the economy. The non-mining sector has slowed down. The tax system's designed for taking tax from the non-mining parts more so, and also it's designed around getting capital gains tax, which of course has been another thing which has been a downside surprise in recent years. These are challenges for getting back to a surplus in such a short period of time.
So do you worry about, the terms of trade? We seem to have peaked. They seem to look very rosy in terms of the forward estimates. And then we've got this $450 billion investment pipeline. I'm wondering how that sort of measures up against the recent comments by BHP Billiton and Rio Tinto that they're sort of holding back perhaps on some of their capital expenditure.
Well, we have in mind that the terms of trade has peaked, but the terms of trade will stay still at a fairly high level, and the budget numbers look fairly sensible in that regard, very similar to the sorts of stories that we're getting out of the Reserve Bank as well. What we have in mind, though, is that it would have been easier to try and get back to surplus a bit, or to at least have smaller deficits earlier when nominal GDP was running more quickly, when the terms of trade was still rising, because it seems to be a general agreement that the terms of trade has peaked at this point. So that does make it, again, tougher to get back into surplus in such a short period of time.
Bruce Rolph, would you say it's fair to say that the carbon tax is driving this budget?
Well, certainly the expenditure policies are a clear attempt to win back the favours of the traditional Labor Party electorate.
Well, I was going to say one of the things that is being argued about at the moment is the pricing of the carbon tax. Now, if Rob Oakeshott, what he was saying before was that he would like to see the floor price of $15 removed, that's going to be very difficult for the government, isn't it?
Extremely difficult. We've long said that really we would like to see a market-set carbon price, and setting it at $26, well above current market conditions, is certainly a significant handicap.
Paul Bloxham, you've worked at the Reserve Bank. Going back to those assumptions for a moment, it seems that the budget is expecting and anticipating the RBA to move further on rates. How dangerous an assumption is that?
Well, I think it's certainly a dangerous assumption. I think the Reserve Bank is going to be as sceptical about this set of projections as it is about any other set of projections, and indeed it is about its own projections. So I don't think that the RBA will be moving in advance just because the budget is projected to get back to surplus and be tight. I think they'll be waiting for evidence that it's actually going to be continuing to hold down inflation and that growth is a bit below trend. And the bottom line is, if, as we said earlier, this beautiful set of numbers were to turn out to be the case, then the Reserve Bank indeed may not need to cut at all.
Paul Bloxham, Bruce Rolph, thank you very much for joining us.
Thank you. Thank you.